Okay, so first trade of the week. We're on the FTSE 100 and it was Monday the 13th of January. The entry candle was at, I believe it was 8:35 a.m. So what we can see is the market has put in a strong rally, testing up into around about the 7620 levels. Now, those levels have been holding fairly strongly on the FTSE for a number of days. You can see it, quite clearly on the daily time frame, the 4-hour time frame, and the 1-hour time frame. Every time the market's been getting up there, the sellers have been stepping back in once again. So, start of the day, we got a nice big strong bullish rally. We got into instant rejection when we tested the previous day's high price. So instantly it's looking like people are profit taking, and also the sellers are looking to once again step in. What I'm actually going to do for this trade is I'm going to pop up the video of when I was taking the trade also, because I record the whole thing at once. I'll just kind of put it small down beside the video so you can just see what I'm doing during a trade. For this particular one, my girlfriend was actually in the office, so you'll probably see me turning and talking quite a lot. That's because I'm talking to her. So we're testing up into these key levels. Now, the type of trade that I've taken, we've had a big strong rally into instant rejection. I like to see fairly fast resolution. So I'm looking for the market to press up and then really quickly reject. And I'm looking for a relatively simple, if you can ever call a trade simple, move down. But what actually starts to happen is that we start to kind of pause and we start to go sideways rather than selling off. Now, when that starts to happen, my analysis kind of changes a little bit, because I'm looking at the market and I'm having to kind of change my initial outlook, because I was looking for the quick rejection, the quick move down into the profit target, and that would be the ideal trade. Now, the market does start off by selling off pretty quickly, but then it starts to hold. And when it starts to hold, that's kind of going against my expectations, especially for this type of trade. So when that happens, one of the things that I have to start doing is reanalyzing the market, basically reanalyzing my decision as we're going. As the market is sort of printing new candles, I have to look at the more recent evidence and start to decide, okay, is this trade still valid? Am I still expecting the same thing, or am I wrong? And do I need to change my mind? That is, I would say, one of the hardest things to do as a trader. It's very difficult for me. It took me a long time to even be able to do it at all, but it's something that I see with beginners a lot. Being able to change your mind, being able to admit that you're wrong, and then being able to take action whilst you're in a trade is very, very difficult, but it's something that can really, really help you as a trader. So for most people, when they're learning especially, they'll just get into the trades and they won't necessarily do anything at all. So maybe the market starts giving them warning signs to come out of the trade, and they start to panic, and you start to get that sweat on your palms, and you start to think, oh, I'm going to have a loss here, and then they just hold for the loss. Sometimes, depending on how you trade, first of all, if you just trade by getting in and holding and that's it, then absolutely fine. But if you are, maybe reading the market, your price action trading, and you start to get those warning signs, it can be good to just kind of reevaluate and look at what is going on. So for this one, as it starts to pause, one of the first things I want to do is kind of, I want to protect my trade anyway. So I protect my trade with the stop to break even. Now, through experience, what I know is that over the space of a huge portion of trades, when I protect my trades, and if the market isn't kind of doing what I was expecting, or it starts to give me warning signs, most often I'm going to get knocked out at break even. And in those instances, I know that taking a smaller profit makes more sense, because over the long term, those smaller profits add up to more than simply holding on to the trade would do. So for this one, what I end up doing is kind of changing my mind, looking at the new structure that's been created, the new swing, and as it spikes down and it starts holding at, you can see it's basically holding at around about £200 of profit over and over again. As it hits down there, as I see the pause again, I come out. Now the market did end up shooting down a little bit lower, but it wouldn't have reached the initial profit target I was looking for. So if I just held on blindly, I would have got taken out at break even. And if I had allowed it to kind of move around a little bit more and didn't put my stop to break even, on that retracement, it would have stopped me out before making the next move. Because what you've got to realize is when you've got analysis, sometimes it's wrong, first of all, but even when it's right, it doesn't necessarily mean that this move on the market is going to be the sort of resolution of the move that you're expecting. Sometimes it's better to come out and wait and reposition yourself later on. And for me in this one, it was taking smaller profit. But yeah, so not all trades go exactly as you're expecting. You very often have to kind of readjust yourself, decide if you've made a mistake, decide if things are still lining up properly. It's all part of trading. It's very, very difficult, but it's something that you really want to get on top of as a trader. And what you can see is I took small profits, but you know, it's very early on a Monday morning. I've locked in the profit. It stopped me from getting knocked out at break even, and it stopped me from taking a loss instead. Okay guys, so that's everything for today. Relatively quick video. As always, hopefully that was helpful. I hope you're all having a good January start to the trading year. I'm James Orr, and thank you.